Hello friends, welcome to the May 2026 target series for RBWM. In this series we are covering all the subjects RBWM, PPB, Indian economy, okay, as well as AFM. So all of them we are covering. We are covering the numericals, objective questions, case studies wherever applicable, right? So watch the series completely, like the video, subscribe to the channel, click on the bell icon, don't miss this, okay? Otherwise what happens, we watch everything but we forget to click on that like button or subscription button. Don't do that, do it fast. First do this, okay? Today's topic, see, today I'll be discussing chapter number 2, retail banking, role within the banking operations. See, today what we will be discussing, I will be discussing case study as well as some objective questions. Case study is also there. So watch it completely. Okay, very exciting case study. You'll get it at the end. Okay, don't miss. What is the primary purpose of retail banking model and what do banks aim to achieve it with? So, what is the primary purpose? Okay, why does the business retail banking model exist? What do banks aim to achieve with it? So what are the answers? Look at it. To increase the transaction fees and minimize operational costs. To act as a barometer for marketing strategy and achieve a top position among the peers. To focus solely on international banking standards. To replace the need for corporate objectives. Replace the need for corporate objectives. Think, what is the option? All the questions are tricky, okay? You'll be finding them, all of them tricky as such, okay? Because in exam also you'll be getting the similar questions. So, what is the answer for this? To increase the transaction fees and minimize operational cost. Is it so? Or is it act as a barometer for marketing strategy? See, you want banking model, okay? You want the answer for banking model, okay, retail banking model purpose. So act for marketing strategy and achieve top position. Everyone, comments. Let me see in the comment section. So the answer is B, correct? Act as a barometer for marketing strategy and achieve a top position among the peers. See, bank structures their models mainly on the positioning platform. See, this is given in the book also. Positioning platform, and to be the best, top 3 among the peer groups players, okay? And that is used as a barometer for all the decisions that impact the marketing strategy of a bank, isn't it? See, how will you know which bank is best? Suppose if I ask you today, which bank is the best bank in our country? Top 3 banks. How will you judge? You will judge based on the positioning only. Okay, you will judge which bank is at the top, who's having the bigger brand name, right? So these things are the important points, isn't it? Got it, everyone? So the answer is B, to act as a barometer for marketing strategy and achieve the top position. Which of the following is not listed as a business model approach for retail banking activities? Not listed as a business model approach for retail banking activities. SBU, strategic business unit, departmental approach, integrated approach, and decentralized regional approach. Now for this you need to read the book. This question is strictly based on the book, Macmillan book. And exam also you'll find the same question like this. It is strictly based on the book only. So which of these models do not exist? Do not exist. 3 of them are existing, 1 is not existing. Think. Which of these models do not exist? What do you think? Do not. See, question is very clear. Do not. Do not exist. The question is do not exist. We saw SBU model is there. Departmental is also there. Integrated is also there. But D, check this. Decentralized regional approach, that is not there. Okay, as a bank model, many of you might be thinking that decentralized regional approach we have CPUs. That is not a model, that is the processing center. Okay. The SBO approach, departmental approach and integrated approach, both are there. But decentralized regional approach is not mentioned in the book. Okay. What is the key differentiator for foreign banks regarding their retail banking models as mentioned? So key differentiator of the foreign banks. Foreign banks means all the Citibank, this Stanchart, okay? They always adopt the departmental approach. They prioritize the positioning objectives over strategies. They rely heavily on strategy rather than just positioning objectives. They do not engage in retail banking activities. What do you say? What do you think? Yes? They adopt a departmental approach or positioning over strategies or strategy over positioning. See, B and C are exactly opposite of each other. Or they do not go in retail banking at all. That is out of question because here, you can't say a bank can't go in retail banking. They can go. Some of them might have exited, but it doesn't mean they are not dealing in retail banking at all. Okay, it's not that. So the answer is C. They rely heavily on strategy rather than positioning. Foreign banks don't believe in positioning. They believe in business, pure business strategy. If there is profit, they are there. If there is no profit, they are out. Foreign banks normally do not go by positioning objectives. Okay, rather strategy plays a big role in the foreign banks. Got it? Why might a foreign bank exit a market? Means why does a foreign bank exit any market? Why do you think? When their business objectives are not met, when the government regulations force them to close, when they fail to adopt an integrated approach, when they become the top player in the market, when will they exit? What do you think? When will they exit? Foreign banks. See, so many foreign banks have exited. Citibank has exited the retail banking business. HSBC has exited. Stanchart has exited. Retail banking they have exited. They have not exited the entire banking space in Bharat. They have exited the retail banking space. Why? Check the reason. Which one is correct? Think. Yeah? Objectives are not met. Government regulations fail to adopt and they become the top player. Why? Yes. The answer is A. Foreign banks had in the past have exited when their business objectives have not been met. Okay, exited when their business objectives have not been met. Correct? They purely exit. They don't believe in first rank, second rank, nothing. If it's profit, do it. If it's no profit, out. They are very commercial about it. Okay? Recently also you might have seen, not in banking space but in other spaces, you might have seen many IT companies directly removing the employees. Washington Post, one of the biggest newspapers, removing the employees or closing down the businesses. They are purely strategically focused. Okay, no positioning as such. Got it? Next, how do foreign banks' strategy generally differ from other banks regarding their retail business model? How does it change? Okay, they focus solely on being top 3 players in the market. They prioritize positioning objectives over other factors. They focus on strategic objectives rather than positioning, and they never exit a market once they have entered it. Is it so? They never exit a market. They've exited so many markets. In our country only they have exited. When they entered Citibank. It entered in 1960s in retail banking. Now Citibank has exited retail banking. Okay. So this is out. The right one is this, right? Which is the correct one? Let me see in the comment sections. D is out. A, B, C. Which one is correct? Right? C1. Foreign banks normally do not go by positioning objectives, but rather strategy plays a big role, isn't it? What is the significance of positioning platform in the context of banks' retail banking model? So, what is it? This positioning platform. Why should any bank use a positioning platform? Similar question we had solved it earlier. Barometer for all decisions impacting bank's marketing strategy. It acts as a final audit report for the fiscal. See, questions can be twisted in exam. That's why I'm taking it in various forms. Okay? It ensures that foreign banks do not exit the market. It guarantees that bank will be the top player. What is it? Positioning platform. Why do we have this? Right? Got it? What is the answer? Correct? A. The positioning platform is used as a barometer for all the decisions that impact the marketing strategy. Regarding foreign banks, what can be inferred about business versus positioning? So what can you judge about the foreign banks? Foreign banks rarely alter their strategy once implemented. Foreign banks are driven by long-term positioning, not short-term business objectives. Foreign banks are willing to exit a market when their business objectives are not met. BNP Paribas is a recent example for foreign banks exiting the Indian market. What can you infer about it? What can you think? Similar question, right? Positioning versus business strategy. Positioning versus business strategy, right? Similar question. So what is the answer? C. Foreign banks had in past exited, right? Exited when their business objectives were not met, and cites BNP Paribas. So BNP Paribas also exited. Many of the foreign banks have exited their retail banking business. Corporate banking, they are still there. Okay? Let's look at a case study now. Case study related to retail banking models in India. Small case study, okay, and questions are asked. A large private bank is restructuring to boost its retail portfolio. So restructuring, it is changing its structure. Changing its structure means it might be changing from bureaucratic structure to flat structure. So many things are, so many layers are in between, right? In our banks, we have so many layers. Joining, clerical, then further and further. AM, manager, then regional manager, senior manager, many things are there. Scale 1, many scales are there. So the point over here is, the bank is changing. Many of the new organizations are flat organizations, flat. Only 3 to 4 layers between the new joinee and the CEO. That's it. Okay? So restructuring to boost its retail portfolio. It decides to divide its organization into autonomous divisions. So it decides to do what? Autonomous divisions. Retail assets, retail liabilities, credit cards. Each with its own profit goals. See, each with its own profit goals. Now look at this. What is this model? This will give you the idea of what the model is. See, each unit or each division is having its own profit goals, enabling faster decision making and flexible, specialized management. See, this is typically the quality of which model? 3 models we have seen: SBU, departmental, and integrated. So this model is for what? Now this you have to think. I'll be asking you the questions. Also, we'll be answering this. Okay? So, this is flexible specialized management. Previously, the bank operated using a departmental approach. So earlier the bank had a departmental approach. So definitely this is not a departmental approach. Okay. Grouping teams by functions, all marketing teams together means, see, earlier the bank has the departmental. What is departmental approach? Cash department, clearing department, account opening department, marketing separate department. So only that team works on it. But this is the departmental approach. The new approaches are SBU approach. In SBU approach, there is nothing called as department. Everyone does everything. The same person will do, means, after all, see, SBU and integrated are somewhere slightly different. Okay. In SBU approach, each branch will have its, or each department will have its own targets. You have to follow your own targets. You have to manage your expenses from your incomes only. No one is going to help you. Okay. So, earlier it had a departmental approach, grouping teams by the function. The management believes this new specialized and autonomous structure is essential to compete with the foreign banks, which prioritize high profit targeted business units. Okay, so foreign banks are there for profit strategy. So even the Indian banks, Bharatiya banks, they are also targeting the same now. They are moving towards cost optimization, right? Meanwhile, smaller regional players continue to use an integrated single unit approach. Now see, in this case study, all the three models are discussed. SBO also, departmental also, and integrated also. Okay, what is integrated model? In integrated model, one person does multiple jobs. That is integrated model. This is generally adopted by smaller banks. In many of the small branches also you have. In rural branches or far off branches, there are only two persons, one maker, one checker, one BM and one clerical staff. Clerical staff does the making, BM does the checking. So multiple activities. That person will do everything. Account opening also, cash also, clearing also, everything. That is integrated approach. So let's focus on the questions. Which model is the private bank adopting by creating autonomous, specialized and profit-driven divisions? Is it creating departmental? Is it creating integrated? Is it creating SBU? Or is it creating functional approach? Think of it, everyone. Which is the model being created by this private bank? Is it creating autonomous, specialized, profit-driven, departmental, integrated, strategic business unit? What do you think is it creating? Yes, the answer is, think everyone, it is SBU, right? SBU approach divides business into autonomous, flexible divisions with control over performance, isn't it? So SBU approach means your own profits, your own expenses. You have to manage your profits from expenses from your income only. Nobody is going to help you. That's also called as MBO, management by objective. SBU will always have one term called as MBO. MBO, management by objective. Here the targets are given first and then we go on chasing it. Okay? Which approach is typically adopted by smaller banks that combine all socio-economic aspects into single cohesive approach? So which approach is done by smaller banks? Smaller banks means, just now I gave you that example. One person doing all the jobs, right? Strategic business unit, integrated, functional structure, and none of these. What do you think? SBU, integrated, functional structure, and none of these. Yes, it is. Think, everyone, fast, in the comment section. Integrated, okay? Just now I gave you same person does multiple jobs. Integrated. The integrated approach is usually adopted by smaller businesses to handle all aspects cohesively, all aspects. Account opening also, clearing also, cash also, fund transfer also, everything. Account means you name it, you have it. Again, what is the main characteristic of departmental approach? Main characteristic. Units are focused. See here. So, what is the main characteristic of departmental approach? Units are focused on long-term performance and are autonomous. It is used mainly by foreign banks. Departmental approach. Departmental approach is used by foreign banks. Is it so? It divides the organization based on the functions performed by the team. It is a part of overall business plan without specialized units. Okay, without specialized units. Okay, is it so? Without specialized units? Without. Okay. So what is the answer for this? Main characteristic of departmental. Again, units are focused on long-term performance and are autonomous. It is used mainly by foreign banks. It divides the organization based on the functions performed by the teams. What do you say? Main characteristic. So the answer is comments. Let me see in the comments. So the answer is C. Departmental approach divides an organization on the basis of functions, not strategic lines. As we discussed earlier, cash clearing department, cash department, fund transfer department, NEFT department, account opening department. Okay? Which type of bank is most likely to use SBO approach for its clear focus and business objectives? Public sector, new generation private sector banks, old generation private sector banks, and cooperative banks. Who is most likely to use the SBO approach? Is it public sector bank? Is it new generation private sector bank? Is it old generation private sector bank? Or is it a cooperative bank? Yes? Think. SBU. SBU will be adopted by fast, agile, speed. B. New generation private sector bank. Means this is related to, let's say, HDFC Bank, ICICI Bank, IndusInd Bank. Okay? So this is as per your book, but practically even nationalized banks are adopting for SBO approach now. Somewhat, they are moving towards it. Okay? What is the primary benefit of SBO approach to a bank? Primary benefit means why should a bank have SBO approach? High centralization of decision making, ability to ignore market trends, high flexibility and control over long-term performance, merging all functional activities into one department. What is it? What is the reason? Why should the SBO approach be there? What is the advantage for all the banks who are adopting for the SBO approach? Think. Yes? Ignore market trends. If you ignore the market trends, how can you work? High centralization. We are moving towards decentralization now. Right? More of the organizations are moving towards decentralization. Merging all the functional activities into one department. Is it so? So the answer is C. High flexibility and control over long-term performance. Can you merge all the functional activities into one department? That will create a bigger problem. Okay, nowadays we are moving towards decentralization. And merging will create centralization. See, we are moving nowadays towards like this. Okay, this is the status today. And what these A and C, A and D says like this. Everything on one spot. So this is wrong now. Okay, nowadays we are moving towards decentralization status. Okay, Got it everyone?